This is Market Day Report. So glad you're with us here on, is it already a Tuesday? Yeah, can't believe it. We're not quite halfway through the week, but we are glad you're here as we start trading this morning. And let's start with the row crops, okay? Corn market is where we'll start our little trek around the track, if you will. The May contract at 477.5. It's off 4 1/4 cents. The May grain options are set to expire this week. December at 458 is 6 1/2 lower. Soybean trade, what's happening here? Well, we're seeing the higher trade up 1 1/2 penny, 10.27 1/4. That's on the November. Soy meal contracts have been lower most of the morning, and soy oil has been actually moving higher. Wheat market, we'll start with Chicago. July contract down 2 3/4, 549.5. Hard red, July down 1 3/4, 562. December wheat in Minneapolis unchanged, 646.5. And the cotton market has the December contract still up 32 points at 68.62. In the studio with us, Chris Swift, Swift Trading. And, you know, Chris, when we talk about these grains, you know, we're talking feed grains, right?
Right, mostly. And right now, this is not an uncommon pattern that we're seeing, sideways trading. We overcame a great deal of the tariff issue in the grains. We didn't see soybeans plummet, as a lot of people thought we did. They didn't rally to any great extent, and they are caught in about an 80-cent range back and forth. Corn had a little bit of a push up and is still kind of trading at that upper end, but it's consolidated the last 4 or 5 days that we've seen. And wheat, probably the biggest consolidator and right at contract lows. We're less than 10, 15 cents from contract lows. Have already started to consolidate there. Just the weather patterns, we got the new crop progress report that started yesterday. None of that was of any impression because it's just so early in the year. And we're dealing with a lot of great variations. Here in the southeast, we're really, really wet. Over in portions of the west, we're really dry. I've watched that weather forecast looking to bring in some moisture into the west. That will help, but I'm not real sure that it's going to do much to overcome some of the big drought issues that they've got right now.
All right, let's talk about a market that just keeps ringing the bell nearly every week.
Yep.
Gold. Yeah? What's happening?
Still higher, and I think it's gotten into a covering of shorts. Those that never believed that gold could get this high, they're still shorting the market, and they're the ones propelling it more than anything, looks like. I know there's central banks buying out there. And it's a safe haven. If we can see what the president, my perception of what he's trying to do is bring manufacturing back into the United States, build a core support for employment on there. But right now, that's a little testy.
Okay. Now I want to throw one more thing in before we jump over to livestock. Philadelphia Fed says late credit card payments have hit a record high in the fourth quarter with $1.2 trillion in credit card debt. Is that telling us something about the bigger economy as we move forward?
Oh, absolutely it is. And, you know, it's one thing that we noticed President Trump wants to lower rates again. All that would really do is benefit the banks. Right now we have a really high retail rate out there that is pretty much dictated by the buying and selling of bonds. It's the retail market out there. And 10-year notes is what we generally get our mortgage rates off of. 2 years is what any kind of adjustable car loans or something like that. All of those are quite a bit higher now on there. And all that tells you is that inflation is still here. We need to curb that inflation. And if you go and lower the rate to the banks, all it's going to do is widen their profit margin instantaneously.
All right. So I wanted to throw that out because we'll use that as the, if you will, the diving board to jump into the deep end of livestock.
All right, I'm ready
and we'll
for
do
it.
that in just a moment. Market Day Report continues after this. Cattle market has been a pretty good performer this year. Just looking at some numbers, year to date, 8.2% gain for the live cattle market. What's happening this morning with the trade? We're higher. Look at that. The April contract has already been above $211. All of the contracts have been above $200. though the October backing off just a bit, 199.85, but look at the June, solid 205.42, up $1.67. Feeders have been up 9.9% year to date. Front month at 287.17, up $1.65, and then that 290.75 on the August contract is $1.62 higher. Hogs have been up nearly 12% year to date, and an impressive 8-day consecutive run higher. June contract 99.67. It's $1.62 higher, but look at the numbers on the far left-hand side. That's the high of the trading session so far. We've already put $100 on the table for both June and July. Chris Swift, Swift Trading in studio. That's an impressive run for the hogs.
Well, considering that the lean hog index continues to go lower, so we're right around $86 for the lean hog index. We put on at least $4 over the last 3 trading days in the hog market. It's a phenomenal divergence of basis that is going on right now.
So why would we see that divergence? Does that indicate maybe some outside money coming in?
I don't think so. I think what we're looking at, either one, they anticipate the lean hog index to begin rallying. And coming into the summer, we always get the bacon and tomato sandwich and the grilling season. People like bacon on their hamburgers, so maybe we see some of that in there. But right now, I think it's just a pure divergence of basis. There's future traders out there that want to be long the market, and they're going to be so whether the cash market wants to or not.
All right, since we're talking cash, let's talk cattle.
All right.
Pretty impressive last week, $6 gains in the south and what, 2 to 4 in the north?
Absolutely, and total manipulation. And when I say that, I'm not saying it in a bad way. What I'm saying is that every sector is having to manipulate their production or processing in a manner that keeps them from having to buy more animals. So we see right now that growing them is the biggest thing that we can do, however big that we can get them, because when we go to have to replace them, everything is quite a bit more expensive.
Okay, and since we're talking about this sector as well, the feeders have been in positive territory,
Yes.
but is there a bit of a warning sign down the road?
Well, there could. There's only so many cattle out there, okay? It's a very small market, and you've got a lot of producers that want to still be in the cattle business. So it is a natural phenomenon that either, one, everybody starts sharing a little bit more, or we begin, unfortunately, to put some people out of business because there's just not enough cattle to go around. And remember, that's a very bad thing to have happen because, one, you lose your producer, but now you have no price support. You don't have those people out there bidding aggressively anymore, and you are the one stuck owning all those cattle and nobody else in business with you.
And part of the reason why we haven't seen the herd starting to
That's right. It's
rebuild
too
yet.
Expensive right now. $2,700 for heifers. They're going to let them walk out the door every day.
Yeah. Chris, always great to see you.
Pleasure,
Chris
Tony.
Swift with Swift Trading, and that's how we start our trading.
Chris mentioned a bacon on a cheeseburger. It's all I can think about.
It's a good way to start a Tuesday.
Yeah, no kidding. It's not too early, right?
Well, a cheeseburger on your bacon.
Oh, there you go.
there you go.
Okay,
There you go.
perfect. Thanks so much, gentlemen.